So let's take a look at the expected high-low indicator again. Now we're going to focus on a day right here that is not so profitable at all. Take a look on the left. We see that this is only trading on Tuesdays. And it's only trading between the hours of 8 o'clock and 11 o'clock. And then we do go flat at 15:50 o'clock, so that is 3:50 in the afternoon. Now, if we were to do that during those times, and if we were to follow the conventional rules, which are buy at the low of the day, so again, we're looking at and analyzing the prior day high and low. So if we were to buy at the low of the day, so this is a green example here, this green line is the low of the day, and we are going to buy there. So green means buy. And if we were to have done that today, which is the 4th of March, it would have been a loser. And we went flat at 3:50 in the afternoon, right? So we went long here. Prices took a big move against us. They came back and they settled down at 3:50 in the afternoon. So we don't want to be in a losing trade, right? Well, obviously, a good solution there is to have put a stop in the market. Certainly, you always want to trade with stops, and recommending a good tight stop would have solved this down move for us. But also think about this. We have to use data to see when is it smart to reverse the rules. When is it the best to not buy at the low, but sell at the low? And expected high-low gives us that information. Take a look at the data on the left here. We have 8 o'clock, 8:30, 9 o'clock, 9:30. So right here is a string of negative P&L. What this is telling us is we shouldn't be buying at the low, selling at the high. What we should do is reverse those rules. We should sell at the low. So we're looking at a breakout. If the YM hits the low of the day on these hours of the day on Tuesdays, we should sell, not buy. We should sell. And likewise, if it hits the high of the prior day in these hours, we should strongly consider buying that high and holding on until the 3:50 in the afternoon. Now, it does change a little bit. So trades that occur roughly, 9:30 to 10 o'clock is almost break even at 220 bucks on 17 trades, right? So, you want to think about that. But right here, 10 o'clock to 10:30, we see the rules are now favorable if we go back to the original rule set and we sell the high and buy the low of the prior day. Actually, we're up 71% win rate, $3,400 on just 7 trades, so that's pretty healthy. So you need to read the data and kind of adjust accordingly. To be honest with you, if the YM hits the high of the day on between these hours, right, from 8 o'clock till 10 o'clock, if it hits the high of the day, you want to be a buyer. If it hits the low of the day, you want to be a seller. That's what that's telling us. And even here, at 10:30 to 11, on 7 trades, we would have gained $1,500 if we reversed the rules. Let's take a look at a couple examples on this chart. So this would have been a good time. Now, let's see. This is a 9:34 entry, roughly 9:32. So 9:30 right here, 9:30 to 10 o'clock is what this trade qualified as. And it was part of this $220 gain. Let's see how big that was. That trade alone was $1,240 on the full YM contract, so that's not too shabby. Had we gone short here, and the full move was a $2,700 move. Now the YM has been pretty explosive here on our in March and February and March of this year, but that's what this data is showing us, that a breakdown between 9:30 and 10 is a good time to be selling the prior day low. So we're looking at a breakout market. Let's go back a little bit. Let's find a prior trade here. Now, not all of them are going to be winners. This strategy, that's what we're analyzing here. So here's a trade. Now this was a beautiful trade to follow the rules, um, but the first trade entered here at 9:34. So 9:34 is kind of a wishy-washy time. We're only again $220 off. This was a great time to follow the main set of rules. If we shorted at the high and bought at the low, we went almost, rail to rail on this trade. Again, I would recommend using stops if we were to go short or long here. Either way, we want to use stops and not be risking too much. You never want to risk more than you have. But this is a great time right here to. Our data shows that we should have bought the high instead of sold the high. And if we did that, we would have had a stop out here, obviously. But look at this day right here. This time is a 10:26. 10:26. Now, what does that tell us? Look at our data. Between 10 and 10:30, which is what this trade is, 10:26 is between 10 and 10:30 in the morning. It's a good time to follow the main rules, and the main rules is to buy the low of the day and sell the high of the day. That would have worked out wonderfully for us in this situation. And having done that, we would have gained a good chunk of profit here. This is a almost a $2,000 trade, as you can see in the ruler, and that would have been great. So the rules here, again, since we're in the green means we buy at the low, sell at the high. That's the rules. Our winners in this case. It was a $2,000 win, so not too shabby. Let's go back and take a look at another one. I think we've got a break-even one coming up here. Oh, let me go back. Okay, so this was a good time to sell the low, but let's see what time of the day this occurs. Now this occurred at about 9:28. So it's really between 9 and 9:30. Now the 9 and 9:30 is a good time to reverse the rule. 9 and 9:30 is a good time to sell the low and buy the high. And that's exactly what happened here. Had we done that, because this is the low of the prior day, selling that, we would have immediately seen a gain of $735 move in our favor. Prices came back, hit the prior day low, and then they did drop. Had you held on to it even more, obviously, $1,000 move in the right direction. But this trade settled out at 13.50 in the afternoon for a gain of $265. Okay, so that's a good time now. Again, that makes sense with our data that would have been a good time to short the market at the low of the prior day. Let's see how this looks. I think we have a break even coming up. Okay, so here's one that was good to go on the primary set of rules, but what happened here? So this is at 9:30, right at the open of the market, 9:30. 9:30s are sort of a wishy-washy case. Again, there's 17 trades. This one was a perfect time to go long. Our data suggested we should have gone short there, but a trailing stop or a initial stop would have saved us. Now again, expected high-low does not calculate these results based on stops. Again, the entry criteria and exit criteria are very simple. The indicator is showing us buy at the low of the day, sell at the high of the day, and then exit out the positions, if the position is still there, at 13:50 in the afternoon. So that's it. That's the conditions. Okay, let's take a look at this Tuesday. This is the 28th of January. The time here is right about 9:42. So again, between 9:30 and 10 o'clock, this is a good time to trade the inverse set of rules. The red line here, the maroon red, is the high of the prior day, which the high of the prior day is right here. And the idea here, the primary set of rules is short the high, because red tells us to go short. We would have shorted, actually, it would have been very profitable immediately. Would have gone down to a $805 in the money. But the rules are telling us, since it's what, 942, we should be buying a breakout of the high. That's what that's telling us. And we buy the breakout, we're actually doing pretty well immediately. We do see money, we do see a P&L of 975 to that point, but the trade at 1550 in the afternoon does exit out with a gain of 395. Okay, let's take a look at another day. Going back in time here. So here's a beautiful trade had we done a breakout. So again, we hit the prior day high. All right, so that's the prior day high. That's a trade that occurred at about 948-ish. 948 again is between 9:30 and 10. And this is telling us we should have bought the breakout of the high, not sold it. So we would have bought at that level, and it would have been a beautiful winner. Beautiful winner. It would have gone up to a profit of 1,170 bucks roughly, and the drawdown would have been down to here, 485, right? So again, something to think about, right? Let's take a look at another trade. Now here's one that occurs, what time of the day is this? This is 8:30, so 8:30-ish, so earlier in the day on this Tuesday, the 14th of January. Okay, 8:30, yeah, let's go with 8:30, right? 8:30, this tells us we should very strongly we should be buying a breakout of the high, selling a breakout of the low. This was a high of the day, the prior day. So it's telling us we should have been a buyer here. And we immediately saw a little bit of a gain. Let's zoom in. Market did certainly move above there. We moved all the way up to this level. That was the high of the move. So really, had we bought it right here, we would have immediately gained a $430 move. Certainly worth moving to break even, if nothing else. Definitely want to peel off some contracts. But even if we didn't do that, let's say we held it all the way through this big drawdown. If we went long and we held it through the drawdown, we do eventually recoup. We come up into the positive territory, but even if we held it till the time of 350 in the afternoon, it's a loss of 220. All right, now here's another thought I want to throw your way is, so we know that when breakouts occur at 8:30 in the morning, we know that the market tends to just continue upward. Okay, so this is a hit of the prior day high. This is telling us the current market conditions tend to go long at the prior day of the high. So what happens now if we're trading this weakness, if we're weak, and then we see a big move of weakness down here? Keep in mind, the market tends to settle above the high of the prior day. Keep that in mind. That's what this information is telling us. That to the tune of $8,400, the market tends to settle above the high of the day. That's very important. As the market moved downward, the move upward is even more profitable in expectation. It's even more profitable. Again, keep in mind, our statistics tell us that this market likes to settle above the high of the day. If it hit it at 8:30 in the morning, it tends to settle above that high of the day. So if you're looking at this market as a breakout to the upside, and we see a move downward, a strong move down, putting in a base right here between noon and 12:30, we put a nice base in here. I would be a buyer at that level. I'd be a buyer on a breakout. I'd definitely be looking for longs. The moment that we broke through at 8:30, the high of the prior day, you're thinking long for the day. You're thinking long for the day. And this was definitely a winner in that case. Let's just think hypothetically. So we're thinking long on a breakout of the high, and we go long at a breakout of this swing high. Now this is a 1, 2, 3 pattern where we break out the number 2 level. So if we went long right here and we just targeted the high of the prior day, that's $1,000 move right here. So if we went long on that hit, so this is a 1, this is a 2, this is a 3. When we broke through the number 2 level, a nice base had been put in. Go long at the number 2, and we target the, let's just do the prior day high, which is that red line. Would have been a wonderful trade. Would have been a wonderful trade. You'd be probably thinking about trailing it. You might have gotten stopped out when we hit the price there again. So this is some good actionable information. Let's take a look at another example of that. All right, we're looking for Tuesdays. Okay, so here's a Tuesday. This is Tuesday, the 7th of January. The signal hit at 10:48-ish. Now 10:48 shows that we should have reversed. So 10:30 to 11. This is what this last line is. So the net P&L loss here tells us we should have not bought at the low. This is a low of the prior day, but we should have sold at the prior day low. Again, that's what this means. So minute it hit this level at 10:48 in the morning, think short. Think short, because this is telling us short is preferred. And that's exactly what happened here. That was a great time to go short. Better time, obviously, is if we come into this double top, or if we put a nice 1, 2, 3 top in here. So we do see a, let's do a triangle. Here's a 1, 2, 3 top. We would have gone short right at that level, right there. And had we done that, going into the 1500 hour close, that's a gain of 920 bucks. That's a gain of 920. So you need to be a little nimble, and you can use the expected high-low data as an idea for direction of the day. Again, if all of these are pink here, magenta colored, that means you want to invert the rules. The entry rules are no longer buy at the low, sell at the high. No, the entry rules that you think are sell at the low and buy at the high for breakouts. All right, I hope that information was helpful. Thanks again for tuning in. If you have any questions, feel free to email me, and happy to talk to you. Thanks again.